Hello, everybody. My name is Christian Charlo. Welcome to your market report. Today we're Friday, November 8th. Today, folks, we had a pretty special week. On October 31st, what we had the last market report, I told you that we were waiting for a new direction. Markets were still staying within a sideways formation. If we take a look here on October 31st, we're around this area. But on Thursday, though, what happened is that the Nasdaq started a small bearish cycle within the upward trend. This was due because we had positive GDP data coming out, and on this positive data of GDP, well, investors are saying we're going to have eventually a topper of the quantitative easing program, so might as well sell because markets are reaching a high. But today we had a positive employment report. So it seems like investors on this rebound, they're saying to themselves that even if we actually might have a tapering of the quantitative easing program, the fact that the employment report is strong, even if we have a tapering, it doesn't matter. We still believe that the markets could go up. So that's why actually we have that rebound. So we're resuming all the points that we lost since yesterday. So what I'm going to do in this chronicle today, I'm going to show you the technical situation of the S&P 500, where we are. We're still in a neutral range. And I'm going to make a follow-up on the last market report. I was about what to buy, what to short, and I'm going to show you this movement today is due because of what? Because of the banks. Because when we're talking of possible tapering, we're talking of a possible rise in interest rate, and who will benefit? Insurance companies and banks, because banks will be able to charge a higher rate for loans, so higher profitability. Insurance companies, they have liabilities, so they'll be able to invest in bonds with a higher rate, higher yield, and they'll be able to match their liability. So it's all on banks that we have this movement today that is explaining the increase on the markets. So the Nasdaq, we're back right now into the neutral range. The SPY is staying there within the neutral range. We're not able yet to start a bullish cycle. The earnings season has been really good. Companies continue to make a lot of money. I think about 70%, 73% of them beat analyst estimates. So this is actually pretty good for in terms of the company, and that's why I think we have this optimism on the markets. But to make a follow-up on what the last market report on October 31st, let's take a look at some of our short opportunity and some of our long opportunity. For instance, we had D.R. Horton. D.R. Horton on October 31st was losing 5% or less. Definitely right now, D.R. Horton is a stock where you should consider to take some profit at 17.58. This is your target. On Tuesday, they will release their earnings. So this is definitely a stock that you should take some profits before next Tuesday. So D.R. Horton, 17.64. This is the point where you should put your buyback order if you shorted it on October 31st. Cray, that was a stock that we thought was the best as a short opportunity. But the thing is, Cray, we thought that the stock could reach at least that old support until 2078 before their earnings, which is due on Monday. But why I recommend to actually get rid of your positions in Cray right now is because if you take a look at the stock here on a yearly basis, look, it rebounded after testing an important upward trend, right? And this upward trend also corresponds to the 200 moving average. So instead of holding onto that stock, on Monday they'll publish their earnings. We might get a bad surprise or a good surprise. We don't know what might happen on earnings. It's like flipping a coin. So that's why on Cray, I would recommend you buy back your position on that stock. It's still neutral, yes, but I think there's a risk that we might either go up. So that's why I think that for Cray, it's better to actually minimize the risk and buy back your positions. On the stock that were for buying opportunities, like 8x8, so far those stocks are still a hold. For instance, here since October 31st, okay, the stock didn't perform much, but you see it's retesting its upward trend. But where you should put your stop loss is at 1032 on 8x8. There was also another stock, it's Kiwi. The stock is still keeping its upward trend. Since October 31st, the stock didn't perform much, but where you should put your stop loss is at 36.86. So it's okay on those long stocks. You hold on to them, but you have to put your stop loss on them just in case markets retake their correction that started last Thursday. On the banks, This is the sector that is standing out today. The best bank that we found that is the grid has the most potential, at least to make a 5-10% in the next few days, is Bank United. Because what we like about Bank United is that, as compared to the other banks that I'm going to show a little bit later, that stock actually had a correction, was able to stabilize, and we believe that the stock, if the momentum in the banks continue, has some potential to at least reach 33 bucks. So it's going to be less than 10%, but still it's about 7 to 5-6% on Bank United. So that's why we actually recommend that stock. As compared to a stock like Key Corp, yes, it's breaking out, but on a yearly basis, though, the stock is totally overbought. We find it a little bit too far away on the cycle for Key Corp. But if you're in for the long term, I would say that on a stock like Key Corp, fundamentally, I don't know much about the company, but technically speaking, if you'd like to get exposure into some banks, knowing that the economy seems to do well with a good week that we had in terms of the economic indicators, and with the possible tapering that might come along the way, with a possible maybe rise in target interest rate of the Fed, I would say definitely those banks are going to do well. So Key Corp, fundamentally speaking, if you're willing to get in and stay there as long as it stays within this upward trend, I would say, okay, you could give it a shot. Bank Corp South, also same scenario, but we find it a little bit too far away in the upward channel. We believe that we're going to have a correction soon, or at least a stabilization phase, even if the stock is breaking out. But if you're willing to get in and say, you know what, I'm willing to tolerate that stock until it stays within that upward trend, well, it's okay, but it's mostly for the long term. So the best bet so far we found is Bank United, right? We think the stock has some potential to reach at least 33 bucks, so about 7%. And look at how the U.S. bank sector is. It actually had a correction, and if the momentum continues and the sector reaches 292.23, we believe that Bank United, which is doing almost the same technical pattern, might follow through. So this is it, folks. Today, we still have markets that are still staying neutral on the NASDAQ. Same thing also for the SPY, so we're still waiting for the new direction. Even if we have positive employment report, markets are rising. We believe on speculation that we're going to have a tapering, and even if it happens that the tapering won't impact the bullish momentum on the market. And in terms of the stocks where you should already put your buyback order, it's D.R. Horton at 1752. Cray, you should buy back now because Monday they will release their earnings. D.R. Horton, it's next Tuesday, so make sure on Monday you buy back your position on that stock. And in terms of the long positions like 8x8 or Kiwi, you still have to hold on to them. And in the banking sector, which is one of the strongest today, which is explaining the increase in the markets, there's Bank United, which is the best, and Key Corp and Burn Corp South. We found them a little bit too over to advance in their upward cycle. So that's why we believe that those stocks are more for the long term, for those of you who like to buy a stock and hold on to it as long as it stays within its important upward trend on a yearly basis. So that's it, folks. See you next week on for your market report. You can have access to all those breakouts and many more on marketgurus.tv for free for 10 days just by clicking at the link below. We publish the movement on the banks around 10 o'clock, so you would have been able to get access to that movement earlier. So look forward to see you there, and see you next week, and I wish you a good weekend.